Joining me now is the CEO of AngloGold Ashanti, Srinivasan Venkatakrishnan. Thank you very much for your time.
Thank you.
The market is certainly excited about the potential reinstatement of a dividend come 2017. I assume that is if all things remain the same.
In fact, to be fair, we have actually resorted to a number of self-help measures over the last 3 years, which has seen improvement in free cash flow and returns. And we have said every quarter that goes by, where we are generating free cash, we'll be looking at getting closer to returning cash to the shareholders. We are certainly putting together a dividend policy, which we'll hope to socialize and get the approval of the board towards the end of this year. So certainly early next year is the space to watch.
Mike Erickson, Senior Vice President of AngloGold Ashanti, recently said at the Dealers and Diggers Conference that the stars are aligned for gold producers. Does it get better than this? You've got a high gold price, you've got weaker currencies in the countries that you are operating in.
I'm glad he said the stars are aligned, but I'm sure he also said we can't afford to relax. That's certainly the message we are communicating internally, because at the end of the day, you don't control a number of variables. Gold price and exchange rates is one of them. It's highly volatile, largely driven by outlook on US interest rates. So it's positive right now, but certainly what we won't do on the back of a more optimistic gold price environment, take the foot off all of the controls and measures that we have put in place. So optimistic, but certainly our efforts continue.
Let's talk a bit about your production. Your forecast for the full year, 3.6 million ounces, between 3.6 million ounces to 3.8 million ounces. Production slightly lower than expected this half, and as a result of an operation in the DRC, Kibali, where you had some unforeseen challenges. Can you elaborate?
With regard to our guidance is still intact. It's around 3.6 to 3.8 million ounces. We have delivered about 1.745 million ounces in the first 6 months, and it's about 47% of our midpoint to our guidance for the full year. And historically, if you go back last 5-6 years, traditionally the first half always tends to be the weaker one for AngloGold Ashanti, with a strong uptick coming through in the second half. Production would have been better in the first half of the year had it not been for the issues we had at Kibali, where we are in joint venture with Randgold, and Randgold is the operator. And we've had issues around feeding multiple types of ores, impacting on the recovery, and plant configuration problems as well. We are basically working with Randgold to basically improve the solutions to the plant in terms of installing additional crushing capacity and also additional sort of ultra fine grind, which is to basically help the material go through more easier. But more importantly, in the short term, what we are also doing is getting access to some of the high grade open pits in which are not far away from where the mine infrastructure is located. It's about 1 kilometer. It's called the Kombokola pit. And when that starts to go through, it's higher grade material. Oxide feeds in very, very easily, and that would help the uptick in production. In addition to that, you'll see production improve in the Americas as we access the higher grade ore bodies, and in Australia as well.
South Africa is becoming a smaller and smaller proportion of your overall production, currently sitting at around 28%. And you've mentioned in your verbiage that Section 54 and further the mass audit reports from the Department of Resources and Minerals are certainly hindering the process. Is it just too difficult to operate in South Africa?
I think the environment in South Africa is challenging, but potentially has opportunities as well. The real issue we have to bear in mind and step back when we talk about Section 54s is we've certainly, whilst we have shown marked improvement in the number of fatals going back over the last 5-10 years, one fatality is one fatality too many. We've had 3 fatal accidents during the quarter. One was as a result of fall of ground, and the second was quite a massive seismic event in one of the mines. So when you've got fatalities, at the end of the day, you cannot put a value to human life. And as a CEO of the company, I take it personally. So as far as the regulator is concerned, the regulator has the right to regulate, and we fully respect and appreciate the power the regulator has and the means they have within their disposal. What we do see that in a number of instances is that the stoppage of Section 54, which we don't object to, can be more targeted to specific offending areas rather than bringing a large deep underground mine to standstill, which takes a while to ramp up, and that in turn causes issues both in terms of safety and in terms of production, etc. impact going forward. So we potentially lost around 44,000 ounces of gold in the first 6 months of the year, and that's potential opportunity lost as well, with one big caveat: you cannot put that value on a human life. Those two are completely separate. So our focus here is how do we improve safety performance at our deep South African mines. And there are 3 mines that have actually gone 1 million fatality-free shifts, all 3 of them underground in South Africa over that period.
Do you think, though, that South Africa will ultimately become a smaller and smaller part of your business? Is that a trend that's going to continue?
I think as far as the nature of the ore body is concerned, the grades are declining in South Africa. So you would expect the grades to come down in South Africa until you go deeper into some of those areas. So it's largely a function of the grade profile of the ore bodies.
Your international business accounting for around 72% of production. A large portion of that is continental Africa. Tanzania seems to be one of the big players in the game. Easy to operate on the ground in Tanzania with the new political environment under President Magufuli. Has that impacted anything?
It's been quite positive to operate in Tanzania. And at the end of the day, Geita is quite a flagship asset as far as we are concerned. And we've had challenges in the past, going back 8 years, 7 years, when we had a pitfall collapse. And we have come out very well since that date to basically convert that mine into a promising operation. But there's just one operation within our stable. We are quite optimistic in terms of what we are doing in terms of our 2 operations in Australia, same in terms of Brazil, and even in rest of continental Africa, where we have just launched on an expansion at Siguri, which is effectively enabling it to extend its mine life and increase production and reduce cost levels. So quite a few pockets within the company where we see opportunities coming through.
But continental Africa is set to remain a big contributor to your overall production.
Absolutely right. And over the longer term, what we are also trying to do is to bring the 2 projects which we have in Colombia, Gramalote and La Coloso, into pre-feasibility study by end of next year to declare a significant reserve base in terms of those 2 deposits, and then you'll see a reserve base which is even more diversified when you look at it in terms of Colombia, the rest of Latin America, continental Africa, South Africa and Australia.
Your cash costs coming down quite significantly, but you are forecasting somewhere between $680 and $720 per ounce for the full year.
Whether you look at it in cash cost terms, whether you look at it as all-in sustaining cost and all-in cost, which basically includes all of the cost metrics, they have actually been trending down.
Your all-in sustaining costs were down some $13 for the period.
That's correct. That's correct. We are down at about 911, and all-in cost came in at about $982 an ounce. So healthy margins from that point of view. So currencies have played a role.
But if those currencies strengthen against the US dollar, that could impact your forecast of $680 to $720 per ounce.
We have updated the projections for the rest of the year based on our latest currency assumptions. Currency is volatile, but certainly we are holding our guidance intact for the full year, taking into account we have already banked half of the exchange rate that has prevailed during the period. But certainly the sensitivities which we put out to the market is a 1% swing in either the price of in any one of the currencies or the basket of currencies does impact our cash cost up or down by about roughly $6 an ounce.
What are the other key risks to that cash cost?
The key risk to this cash cost is obviously around the fact that inflation gets ahead of you in a number of these jurisdictions. So how we manage inflation, and it's very similar to sort of running down an escalator that keeps coming. You've got to keep running faster if you're going to stay ahead of the game. So certainly cost control measures, looking at how we can improve our operational efficiency, thinking outside the box, all of those are part of that equation, and part of our brownfields opportunities also helps to recycle elements of the portfolio so that you're actually replacing mature parts of a mine with more new areas of the mine where the margins are much healthier going forward.
You've repaid some of your expensive debt. In fact, you completed the bond repayment process 1st of August. Is there more room to maneuver in terms of strengthening your balance sheet, paying off more expensive debt, or are you pretty much done on that side of things?
I think we're pretty much done in terms of the balance sheet. Our target was very much around getting net debt to EBITDA around 1.5 times through the cycle, and at the same time also bulleting the most expensive element of debt, which was the high yield bond. And we have taken out all $1.25 billion out of that. So the rest of the bonds are quite comfortable in terms of maturity and also in terms of percentage of the interest we actually pay in that regard. And we've got enough headroom under our existing banking facilities.
What are the key questions shareholders are putting to you? You've just had your results presentation for the half year this morning.
That's a good question. The questions really were around pretty much what you're covering. Dividend is certainly
top of mind.
The top of mind of number of shareholders. Secondly, they're also quite keen to understand what the ability of the business is to maintain the production profile and to expand on the production profile. In that regard, our brownfields and greenfields opportunities have gone down exceptionally well. And at the same time, the question was around production guidance and, more importantly, the impact of Section 54s on South Africa. They are the main sort of themes that have been coming out, but overall have been quite complementary in terms of how we have delivered the first 6 months of results.
Well, we've spoken about the volatility of the gold price. I want to go back to Mike Erickson again at that Dealers Diggers conference, where he said that he believes, and I know this is very difficult to put a forecast out there on the gold price, but he believes that a floor has been achieved at around about $1,200 an ounce. Do you concur with that forecast of the bottom?
Even the most well-known economic pundits will say forecasting a gold price is quite challenging. It's like a Rubik's Cube. It trades as a commodity, it trades as a currency, it trades as a safe haven investment, hedge against inflation, and multiple facets in that regard. So whenever you see one factor pull the gold price up, in this case, it's negative to zero real interest rates and the likelihood of the Fed not increasing interest rates, gold gets the momentum, but you suffer the setback in terms of jewelry. Where Mike is right, is potentially a floor has been reached in terms of 1,200. In terms of a good floor at $1,200 in US dollar terms. But having said that, what we'd want to position our business is to withstand shocks in the gold price, even if it's for shorter periods of time, but position it in such a way that it can also exploit the rally in the gold price.
Shocks as big as last year's shock to the downside, down 28%, you'll be able to sustain in an environment like that going forward?
Absolutely, we would. If such a shock were to happen, the balance sheet is in a much stronger position. Our operations are more efficient. So certainly we can withstand that sort of a shock coming to the system. But at the same time, we want to also position it where the margins expand as the gold price goes up, as you have seen in the last 6 months' results.
I've been chatting to the CEO of AngloGold, Srinivasan Venkatakrishnan.